Was Binance really behind the $19 billion crypto market crash last October? Former CEO Changpeng Zhao calls claims of Binance causing the massive sell-off far-fetched, noting the incident was due to a brief USDE stablecoin depeg. Binance compensated affected users with $283 million, but market volatility continues to impact crypto prices. Was Bitcoin's October crash really caused by Binance's yield campaigns? OKX founder StarXU claims leveraged loops with USDE on Binance triggered massive liquidations, changing the market structure. Binance and other experts reject this, blaming macro risks and excessive leverage for the $19 billion wipeout. Bitcoin's sudden drop from the global top 10 assets is shaking up the crypto world. Over the past week, its price plunged more than 11%, now ranking 13th with a $1.57 trillion market cap, trailing Saudi Aramco and Tesla. Ether also tumbled, losing 14.5% in value and falling to 56th place, as macro factors like Fed policy, geopolitical tensions, and the end of the precious metals rally hit both digital and traditional markets. A sudden wave of forced liquidations wiped out $1.8 billion in crypto positions, as Bitcoin and Ether plunged, triggering panic across the market. Binance responded by converting its user protection fund to Bitcoin and committing to buy more BTC if the fund drops below $800 million, aiming to stabilize sentiment. Meanwhile, macroeconomic uncertainty and Trump's tariff threats pushed investors towards safe haven assets, intensifying the sell-off. Ethereum just broke below its crucial $2.800 support, raising red flags for traders everywhere. The price has dropped over 10% in 3 days, with technical charts and on-chain data pointing to further downside toward $2.100. Key support now sits at $2.500, and the NUPL indicator has entered the fear zone, echoing the start of past bear markets. Prediction markets now show Bitcoin has nearly equal chances of plunging to $69,000 or rebounding to $100,000. Recent volatility, driven by U.S. government shutdown fears, pushed the Crypto Fear and Greed Index to extreme fear at 16. Traders on Myriad have shifted to a bearish outlook for the first time in 2 months, with Bitcoin trading around $82,927 after a 2% drop. Binance is shifting its entire $1 billion SAFU fund from stablecoins to Bitcoin, aiming to reinforce confidence after last October's market crash. The exchange pledges to keep the fund at $1 billion, topping up with BTC if its value drops below $800 million. But user trust remains low despite these efforts. Ethereum's recent breakdown below $2.700 has reignited fears of a major price correction. Heavy ETF outflows and bearish chart patterns suggest Ethereum could drop another 20%, with technical analysts warning of a possible move toward $1.850. Vitalik Buterin's transfer of 16,384 ETH aims to support long-term network development, but for now, market sentiment remains cautious. Bitcoin's price tumbled below $82,000 as mounting U.S. government shutdown risks and tightening liquidity hit the crypto market. Despite lawmakers moving closer to a funding deal, ETF outflows and a rising treasury cash balance continue to pressure Bitcoin and Ethereum. Analysts say macro factors, not panic selling, are driving the slide, with uncertainty likely to persist even if a shutdown is averted. Elliptic traced over $500 million in USDT stablecoins, linked to Iran's central bank, revealing a sophisticated strategy to bypass global banking restrictions. In April and May 2025, the Central Bank of Iran acquired USDT to support the falling real, routing funds through Novitex and later blockchain bridges after a major security breach. This network highlights how transparent blockchains can expose attempts to build sanctions-resistant financial systems. Imagine $1.5 billion vanishing from Iran in just 2 days, mostly through crypto channels. Iranian regime elites, including Khamenei's son, moved massive funds to Dubai as unrest and strike fears grew. This capital flight signals deep anxiety, with Dubai's financial market now under the spotlight. Over $40 million in U.S. government-seized Bitcoin was allegedly stolen by the son of a contractor with insider access. Blockchain analysis links the theft to wallets managed by CMDSS, raising concerns about the security of over 328,000 Bitcoin held by U.S. authorities. The incident highlights major vulnerabilities in federal crypto asset custody and oversight.